The Indian real estate has always been known for its lies, half-truths and information blackout. There is a general feeling that this is a sentiment-driven business and every stakeholder tries best to keep the sentiments positive, even at the cost of speaking plain lies. But now, one leading stakeholder has dropped the truth bomb. Rajiv Singh has talked about flattening sales curve in the business. Who is Rajiv Singh? Rajiv Singh is the chairman of India's largest real estate company, DLF. Rajiv Singh has categorically talked about the challenge of flattening sales curve in the business, something that nobody wants to admit. Sales have slowed down in the business, but the developers for long have tried best to project as if sales have been at a very high velocity. Irony is that in this business, most of the research reports are coming from the brokerage houses. Their main business is property brokerage and hence they cater to what developers want to listen. So most of the research reports are rigged in this business. One report contradicts the other one depending on who is the client of that brokerage house. So flattening sales curve has been a reality that anybody who knows Indian real estate closely knows very well, but nobody was accepting it. Just think of it. How many cold calls do you get to buy a property? Now the life's costliest purchase is being sold like this, cold calls. This itself proves how challenging is the sales in this business, something that nobody was talking about. Rajiv Singh has also talked about stagnant property prices. This is brutal on the face of those who are trying to tell you that real estate is the best asset class. Real estate as an asset class gives you the maximum return on investment. The fact of the matter is that Rajiv Singh is right on point when he says that unreasonable return is expectation of unreasonable return is a challenge. These are the uncomfortable realities which will do very well for the sector if they take it seriously and work on it. Lastly, Rajiv Singh has talked about speculators driving the business. The fact of the matter is that this is one business which is driven not by the builders but by the brokers and underwriters who are speculators. They take the inventory at the early stages of a project where the developer is in a hurry to offload the inventory, and then onwards speculators dictate to the builders, they dictate the price point, and when they interface the buyers, then they say, see, the developer is selling as 20,000 rupees per square feet, but I have some inventory, I will give you at 15,000 rupees per square feet. This is how artificially prices are inflated. The point is, will the larger share of stakeholders in the business listen to what this gentleman has said? Will the industry start accepting the brutal truths, or the industry has, the way they have lived in denial, will the industry continue to live in denial? These are the uncomfortable questions which could goad the Indian real estate to the right direction, but unfortunately most of the leading stakeholders are tight-lipped on these issues. Three major problems before the Indian real estate is flattening sales curve, stagnant property prices and speculators driving the business. At least one gentleman has shown the courage to speak. Will Indian real estate accept these realities? Well, my guess is as good as yours. Thanks for watching.